Probably one of the things I appreciate most about Obris, and it's been why it was so hard pre-Obris for me to do investments, was I need to know the founders. I need to know the people who are doing the company. Because if you don't know the founders, you don't know the company. You don't, just period. And if you can't get a read on the founders and you can't do that, don't invest. Just don't.
Welcome to the Global Investor Podcast. The goal of this podcast is to offer investors and entrepreneurs insights and practical advice to dramatically improve the kinds of deals that you invest in and the returns you get. My name is James Evenson. I'm one of the partners at Crown Private and our investment syndicate, Obris, by Crown Private. Obris is about exceptional people, unique experiences, and bespoke investment. Our membership and the Obris community are made up of like-minded yet unique and adventurous individuals, as well as family offices. We invest in a spectrum of deals from established companies to startups. We do so with a proven formula of due diligence, structuring, and management. Our guest today is Kyle Gonzales. Kyle is a member of Obris. He is also an active investor, and he is someone that I consider both a friend as well as one I look to for his expertise in due diligence, particularly in the early stage sector. Kyle was a senior director at Red Hat, a multinational enterprise open source software company. He was with Red Hat for more than 18 years and built and led technical architecture and business development teams working with global financial services and telecom companies such as AT&T, Deutsche Telekom, Bank of America, and Citibank. Kyle, in my world, is best known as an active investor. He does thorough due diligence in the companies in which he invests. He sits on boards and is very active in the companies which he invests. Currently, he is active with several early stage companies, two that he founded himself, along with partners, as well as a couple of our portfolio companies. Please welcome Kyle. Kyle, thanks for joining us. Where do we find you today?
So I'm in Jacksonville, Florida.
Okay.
Kind of crappy outside today, but usually winter's not the best time to be here. But
Florida, home office, I imagine. Yep. You've been a member of Obris for several years. In fact, you and I met for the first time when we were both considering membership in Auckland, New Zealand, almost 5 years ago. What led you to Obris, and what keeps you engaged in Obris today?
I mean, I think for me, there was an interest in, I was already doing some investing on my own. And what I found is that it was honestly kind of a fight. Like, it's funny because there's many investments out there, like trying to get any kind of information, getting exposed to different things was just like, I felt like I was a detective trying to hunt down things. So I knew the founders, Mark and Chris, from a number of different things we were doing online. Knew them for a couple of years, and they invited me to come out. And it worked out, for me to come. And of course, it's in Auckland, so that was a good time. And actually, it worked out too. I just closed a big deal at work, so I was like, all right, well, now I got some cash, so we're going, taking my wife to Auckland. What's kept me engaged is really the people. I mean, there's people that I met, like yourself, there, the first meeting. There's a large number of people that I still keep in touch with. I mean, even people that aren't even still part of Obris, but I still kept in touch with them because they just, showed up or whatever. But and that's the thing that really keeps me engaged is that my Rolodex of people who I trust that I can reach out to has grown tremendously. The amount I've learned from Obris, both from the deals and from the other members, has been tremendous. And there's even getting now. I mean, I think in almost 5 years now, I think there's a sense of ownership in the group that it's not just passive. I'm not just sitting back and letting things back. Like I can get involved in the group and help the group evolve into what I need it to be as my needs as an investor change.
Yeah. Yeah. No, that makes a lot of sense. What you just described is your own story that is paralleled by many of us who came in with their own background experience and have gleaned significantly from being a part of the group and deep relationships. I'm glad that has been the case for you. Our primary interest today, and the reason I wanted you to come in to do the podcast, is I've always been impressed with how you function as an active investor, both in established private equity companies as well as early stage. You pour yourself into the companies that you're considering and then the companies that you invest. But before we go there, let's speak a little bit about what got you to where you are today. Earlier this year, you retired from Red Hat, where you were a senior director. What led you to retiring? What led you to retire, and what have you retired to?
I mean, really, I have Obris to blame for the most part. My wife, I think, I got it. I mean, one of the challenges I think saw with the corporate world is that, kind of being part of a royal court. Like if you're in the corporate world, you work at their behest. And unless you're at the very top, you really don't have very much control. And I think over the past couple of years that even as I moved up, like they can pay you plenty, they can take care of you, you can do things, but they're gonna get their measure out, right? Any company that employs you, they're not employing you because they're being charitable, employing you because they want to extract something from you, and they're gonna make a profit from it, right? So whatever they're giving you, if they're giving you a raise or a promotion, that's not just because they're feeling generous. They're going to ask a lot. And it just really got, to the point that there was, really obviously that, no matter how much you can get there, you're never truly in control of your destiny unless you're at the very tippy top of a company. So really looking for a place where I can do things kind of on my own, control my own schedule. I think my wife got tired. Instead of, thinking of things by the seasons, most of my calendar was dictated by our sales quarters. And I got kind of tired of that. So I think that's something I want to get up to. Interestingly enough, for me, really, I'm retiring from the corporate world and moved right into the startup world, right? I went pretty quickly from investing in startups to being in several startups myself. And a lot of that education came from just the experience that I've had so far with Obris.
Yeah. Well, as I recall, even though you were working full-time, you were putting in another probably close to full-time in your investment world as well.
Yeah,
so it must feel great so that you can now do 2 full-time jobs just in the investment.
Yeah, world. Only do 2 full-time jobs. Yeah.
How's it going so far? Tell us about what companies you're working with now. Is there anything particularly engaging, that's drawing upon the best of what is Kyle?
Yeah, so I'm in a probably my where I spend most of my day, and if you see me on LinkedIn, where I'm spend way too much time these days, is I helped along with some other people that we know that are in and around the group to found a company called Next Prime. That we're a clearing and settlement platform for large institutional buy-side players in the crypto space. That's just the barest minimum I can do to kind of describe what we do.
Sure.
Right. But that's been pretty busy, and I'm doing leading sales and business development for that, which is why I live on LinkedIn, my new home. I did it a lot before, but not like I do now. Also have another startup that I actually started several years ago, and it's been still near and dear to my heart. And I actually learned a lesson where I actually gave up a majority stake to get the right people involved in it. It's called Avogadro One. They presented at a couple of some Obris events. The CEO is Vitali, who I think anybody who's been in the group knows, been very dedicated. And I and so the co-founders, we actually stepped out of our majority stakes to get to bring Vitaly in bigger, and also to bring a CTO, someone I'd worked in before, who's really gelling and bringing the company there. They're actually going to be at their MVP really now. They're going to start pushing sales in early Q1. And so that's a really interesting company. They're a there's a lot of companies aggregating data online. They're doing kind of a search, it's a research, not search, right? Where they can kind of make sense of a lot of the data feeds coming in, right? We're always reading news sites every day, but we're always looking for data that matters to us, and they can kind of dig through a lot of that and matter. And I've actually used it in my first startup, right? Where I have them do search for relevant institutional articles in the crypto world, and I get them delivered to me every single day. So I have topics to look through and get data, and not just crushed with random news that's coming across the wire.
We can actually put in the write-up on this, we can put a reference to Avogadro.
Yeah, absolutely. You can sign up for free now and can see what it's about. I mean, it's really progressed greatly over the past year, and I think we'll see further improvement.
What is your role with Avogadro?
Honestly, right now, I'm kind of like their Yoda. I come in and give them advice, and I test out systems, but the CEO and the CTO, they're the full time on it. But I come in and, help them when they have a question about corporate structure or how to go approach, or really, honestly, a lot of the same kind of advisory things I'm doing for a lot of the startups I'm involved in. I just happen to be much more daily involved, probably in them than in others.
And over at Next Prime, what is your primary role there?
The head of sales and business development.
Okay. What do you think? I referenced before that they're benefiting from the best of Kyle. What do you think the best of Kyle is? What do you? We're going to dig into your due diligence process here in a minute, but I want to ask you just kind of candidly, since I didn't give you this as a prep question. What do you do best in the investment world?
The interesting thing for me is the thing I've built up my career around, probably two things, is around both endurance. Has always been one. If you're in the corporate world and you can't get beaten with a bat on a regular basis, then you're never going to survive. But the second one is finding what the problem is, right? Go try to break something, whether you're doing it, mentally going through your head where you're going to find the flaw, or actually going through and testing it, right? Whether it's a new product that's coming out and you have to go, okay, well, how are our customers going to beat us up when this new product comes out, right? Or we do a new sales campaign and we're like, oh, wait, something's missing here from what we really need to say, and we're going to get burnt with it. So how do we try to patch it and, change the campaign or whatever? And then try to flip it around. And once I find whatever's broken, then we try to fulfill it and make it right. And I think when we're getting into, it's a useful thing when you're in a startup, right? Because everything is moving very, very fast, and you need to look at something and go, where's the problem, right? And is it something we need to address now? If it's not, let's at least write it down. If it's something we do need to address now, then to fix it. But it's also important in a startup, right? Whenever you're evaluating an investment, is finding where something's going to break. Because let me assure you, it's going to. I mean, even down to the most basic thing, like when, for Next Prime, for instance, when we bought an entire set of servers, we set up our entire environment, and we had one, just when we were in, in pre-production, had only one server that was the only server that was unique, right? And it had everything else was redundant about it. We had redundant power supplies, drives, network connections, like everything you could do to make it redundant. And the main board failed. So the only server that we had that was the unique server had the only part of the server that couldn't fail because it was unique fail. So that taught, we're like, nope, we should have known that was going to be the one place that would break. Fortunately, we got it, it happened well before in production, so we got it replaced, and we immediately made sure we had plenty of redundancies for that. So it's just looking for those, and that's a really I guess sometimes I dig into people that are like, you're very negative. I'm like, no, I'm not negative. If you believe me, you want me to find what's wrong before like the market or time or happenstance find that it's wrong. So, and that's a big thing that I end up applying to a lot of my companies, and then working to figure out how to remediate that.
Mm-hmm. Excellent. Well, let's speak a bit about due diligence. That's where I think the first place where I saw you really shine is your deep dive due diligence. And just a little context for those listening or watching. A lot of our folks are not familiar with Obris and our processes, but when a deal first comes to us, there is a team of people who do the deep dive, and each of us have our own unique perspective. And I've really come to appreciate how yours complements my own. Tell us about your due diligence process, Kyle.
Sure. So, the thing with Obris is that the deals that are coming in are from a variety of industries, right? So the first thing in a due diligence process is you need to learn, right? You have to take what the founders are saying about their company, right? And get that in and due diligence. But you can't fully rely on the company itself to tell you what you need to know about the market. If you do, it's very much like the news. I think what was it, like Mark Twain said, if you don't read the news, then you're uninformed, and if you do read the news, then you're misinformed. If you're not if you're not familiar with a market, right, you're gonna not know about the market, right? But if you only read what the company tells you about the market they're going into, you're going to be misinformed. And it's not their fault. They're not trying to mislead you. It's just that, they have a view of the market, and you really need to go more broad and understand the market and understand the money's being made here. So for me, a big part of any investment is understand that market. I don't need to know everything, but if I can't wrap my head around it, then I don't invest in it, because then I can't judge the risk, right? And in a lot of cases, there's been investments that I've done that was the first thing that got nixed was I looked at the market and I'm like, I'm going to get anywhere near that market, right? I don't want that in my portfolio. I know it's going to be an ugly market. It sounds good, too frothy, but it's got to pass. It's got to pass through, the market. Got to seem legitimate. Mm-hmm. The next thing in the due diligence process I found is about the founders, right? Probably one of the things I appreciate most about Obris, and it's been why it was so hard pre-Obris for me to do investments, was I need to know the founders. I need to know the people who are doing the company. Because if you don't know the founders, you don't know the company. You don't, just period. And if you can't get a read on the founders and you can't do that, don't invest. Just don't, right? Investing on a slide deck, don't do it. And in fact, if you invest on a slide deck and it burns, that's not their fault, it's your fault. You have to know the founders, you have to know their motivations, you have to know their capabilities to do things. I'll tell you a great side of this is one of my largest startup investments right now is with a company called APIMatic, which is one I was introduced to. Actually, my very first meeting with Obris when I was in New Zealand, and
I had CEO, dinner with one of the founders just a couple of weeks ago.
There you go. So the founder, Adil is the kind of CEO that I wish every single startup had, and the reason is that I see a lot of startups that want to, like, I have a great idea. I want you to give me a lot of money and I'm going to hire a bunch of people to do all this work for me. If you see a startup like that, run. And Adil's not like that. And Adil is involved in every aspect of his business. And not only that, but Adil realizes that it's his idea, right? He's the person that people want to see and talk to. So what does he do? He puts himself through a brutal schedule, right, of traveling between his home in New Zealand and the development offices in Pakistan, and then traveling literally around the world, probably multiple times every single year, going to conferences and getting his thoughts and ideas on his market out there, right? He gets interviewed, meets people. That is what you have to do. And he's doing that sort of thing on a global scale. And so, when I look at a company like that I met, I'm like, I sat down with the founders well before I put in there and really got to know them. And that's why I've, invested in them 3 times, because I know, like, he's going to make it happen, right? He's the kind of founder that does that, right? So founders are the big thing. And then the final part is like, okay, if you look at the market and you're like, I want to be in this market. I understand this market. I think I should be there. And you talk to the founder and what they're doing, and you really feel good about the founder or founders, right? That they can hear you. Then you look at the deal, right? And the deal is twofold, right? It's really, this is where you start looking at the company, right? Which is, do the numbers make sense? And does what they want to do make sense, right? So for instance, I had an investment where I went through it. The market was great. It was a home healthcare company. And they were doing essentially like robot friends for elderly people, right? Which, almost seemed like, if you'd said this 10 years ago, I'd be like, that's stupid. Huge thing now, right? This remote assistance, people don't want to go to a nursing home. They want to age in place. They want to be in their space, right? So I looked at that market. The market was great. I talked to the founder. Founder was really smart. Went through the deal, and the financial side of the deal was pretty good. And then I finally asked him, I'm like, well, what kind of company do you want to build? Right? Because this is robots. We're talking about it. You've got patents. And we got to the end of it, and we're like, well, okay, I have a really important question for you, right? Because I'm investing in this deal. Are you going to take my money and build up more technology in this space? Or are you going to take my money and you're going to build a bunch of robots and try to be a robot company? And he's like, I want to be a robot company. And I'm like, well, I'm not giving you my money. And he's like, why? Why are you not giving me my money? I'm like, well, because I am 100% confident you are going to develop great technology in this space, and you're going to be able to patent it and get it used. However, you know absolutely nothing about building robots. You know nothing about manufacturing. You know nothing about production. You know nothing about distribution. You don't know anything about that, right? So if you tell me you're going to try to do this and build up, production, I'm like, well, you don't have any expertise in that, right? If you told me you were going to build a great patent portfolio in this space, work with the key players and get your patents in place, then I go invest in it. Now, fortunately, that person reached back out to me after about 6 months of banging their head on trying to build robots, and goes, yeah, I don't think I'm good at building robots. I think I just want to build technology. I'm like, all right, well, let's talk and let's go get the deal. But those three things have to be there, and you have to go through them with every single investment you do, and you have to get it. And I've done, and I will tell you, when I look at my investments, I've already got a couple of investments that have blown up. Because look, if you're in this space and you're not prepared to lose money, it's like, don't go in the, I hate to use the casino thing, but it's like if you walk in a casino and then you get mad that you lost the blackjack, why'd you walk in? Why'd you do this? Like, some of your deals are going to blow up. But when I look at them, it's because I didn't pay enough attention to this space. Honestly, probably the biggest ones I didn't pay attention to, the founders. The founders is probably the biggest one. I had two investments I've taken write-offs on, my most recent, and it's because I let someone talk me around the founder issue, and I'll never do it again.
All right, bullet points. Founders.
Founders, market, and deal. What are they doing? What are you actually investing in, and what are you getting out of it? Founders, you have to know.
Founders,
yep. And make sure you feel good with all three of those before you send your money. Because there's a lot of people that need your money, and there's a lot of people going to do some great things with it. And there's a lot of people that are going to waste it. So right. Do your due diligence.
You're right. I think that's really wise. A lot of people who are investing aren't where you are. They're not as established. They haven't been through a few hundred deals as you have.
Yeah.
How would you advise them to build the expertise as they look at founder market deals? Look at
deals. The way that you learn this is by looking at deals and comparing deals, right? It's like anything else. Like this is a skill that you build up. It's not there's no talent. Like, somebody didn't get born and at 3 years old, they're, picking perfect VC deals like a prodigy, right? You have to look at deals. You have to look at track records. You have to look at things that work, and really look at things that work. Like, don't, like, I'm sure like 2 years ago, everybody thought WeWork was actually brilliant. And it actually is brilliant. The CEO is going to make out like a bando on that deal. every single other person in WeWork, is really going to eat it. Right. But you have to look at the deals, look at the things that they're doing, look at what people are raising for, ask the questions. Even if you're not sure about investing it, just look at the deals, right? Because you have to build up that kind of understanding. You have to ask a lot of questions. Don't be afraid of asking the questions. Don't be afraid of quizzing the founders. Like if somebody's asking you for $10,000 and they won't give you 30 minutes of their time, then you don't give them your money, right? That's a lot of money. $10,000 for 30 to 60 minutes. That's a pretty good ROI on top, right? Go make sure you get that time, get your questions answered and understand.
You, Kyle, are a very active investor once you have decided to invest. And let's take APIMatic, for example. You're on the board of APIMatic. You are on calls with Adil and his team on a probably at least weekly or more than one weekly basis. What does it mean for you to be an active investor?
Well, I think for an active investor, I mean, look, if you go tomorrow and buy shares of Apple stock, right? You know what you can't do is you're not going to call up Tim Cook the next day and go, "Hey, Tim, I have some ideas. I think I can go contribute to your bottom." Like, it's not going to.
Correct.
They're going to take your call, right? But you're looking at a space where, especially where Obris is in the market, it's earlier stage, right? And any early stage company does not have all the resources they need, period. Right? They might not have all the things they need. I would say, in fact, for me, and where I get very involved, is that a majority of startups are founded by people that don't know how to sell things. And it's not their fault. Like, it's not that they're deficient. They just haven't done it. Sales, just like learning how to invest, learning how to do diligence, learning how to sell is a skill, right? And if you find a lot of early stage startups, especially if they're based on technology, those startups are going to focus on people that are writing code. They're going to focus on people that are developing the product and getting them in the space, but they're not focused on people that know how to sell a multi-year deal into a corporate procurement department and talk about how to structure the deal or how to do things like that. So that's from my perspective, that's a lot of how I get into companies and a lot of how I provide feedback is on sales and business development, right? Because it's something I do. It's something I know. I don't have to go sell the deal for them, but I mean, specifically like with the APIMatic, I've definitely walked them through how to structure deals if they've hit a loggerhead and they can't move forward, giving some advice on how to try to get around that. I've done that for several other companies as well. I have a couple of companies that are not in the Obris portfolio. Not that there's anything wrong there. Just came from a different place and been able to advise them as well, right? And so I think that from your perspective, right, if you're making an investment in an early stage, you need to be active. Why? Because it's your money, right? If you can do something to help that company that you've put money into, right, you should do it, because otherwise, why are you not trying to make yourself more money, right? And it doesn't take much. I mean, it's a phone call. Maybe it's man, I think your product's great. I'm going to invest in your company. And then I know someone who really needs to use what you're doing. You make an introduction. You grease a market. You introduce them to a new place, whatever it is. But, you want to get involved. And there's not a lot of places when you're looking at the stock market, right? Other than, playing around with this stuff, you can't get, public stock markets, you can't do it. But in private equity, especially at early stage, this is a place where you can be active and you can leverage the things that your experience, and go through and make yourself more money.
Yeah, very, very well said. I love that within Obris that there is enough diversity amongst what we're talented at, that you may be actively involved with a few companies, I may be actively involved with a few companies, and so on and so on amongst the members. And it's fun. Isn't it fun?
It is. And honestly, I've invited people. I mean, when I think about inviting people to Oprahs, sorry, I almost went old school name. When I think about inviting people to Oprahs, like I've recently invited one of my good friends in, because he's been looking at doing more investing, but wanting to be more hands-on, right? He was a hands-on real estate investor. That's how he's been doing it. So he's not just investing in projects. He's out like looking for properties and renting them out and knowing how to maximize and read the market. So he's already kind of been active in his own portfolio and really liked the idea that he's going to make early stage investments, that he wants to be active there as well.
Yeah. Well, let's pivot a little bit. I would like to see, you're mid-career right now, and yet you've retired. How have your investment priorities, behaviors, and goals changed since you retired, or since you decided to retire?
Yeah. You know, what's interesting. I thought about this, and the reality is it hasn't. And the reason it hasn't is because of the reason that I rolled out my investment philosophy to begin with, right? I think anybody who's in the US is the typical thing, like you work for many years, work for decades, you save up your money and you get with a financial advisor. And then the idea is, the whole idea is save up enough money so that it doesn't run out before you die, right? I'm like, well, that just always sounded really dumb to me. Right. I'm like, I don't want to play a game. I'm like, what if medical science does something awesome and says, Kyle, you can live to be 150 and buy a condo on Mars, but your 401k runs out when you're 80. Like, I'm not going to go back when I'm 80 and become a Walmart breeder. Actually, I can't, because they eliminated Walmart breeders. So sorry.
You're right.
You now no longer have that. So I thought very early, I said, my objective is twofold, right? I have, my investment philosophy was I wanted to make sure that I had a strong cash cushion just to make sure that stuff happens and I make sure that I can survive it, which is part of the reason that I've been able to do my retirement. I have a core of my investments that are focused on long-term income plays, right? To build up a core to make sure that my rent gets paid. And they're the kind of investments that I look at that are ones that they should be able to pay me for a really long time, right? I can put them in place and that they have, once they're at the maximum payout, that they should be able to operate for a decade plus to really get things out there. If I don't have something that matches that, then I take the income that I'm looking for that. I'll put it in something short-term that's income producing until something longer-term come along. And then beyond that, that's where I start looking at startups where I can make a play. The startups took me a little bit longer to focus in on, what I was looking for. But I think it's important to have, startups there because that's a way of generating additional capital for you to invest elsewhere long term. And when I retired, that didn't change, right? I mean, when I was employed and I had my objectives, I'm like, okay, here's my check down. What's my cash look like, right? Do I have enough of a cash cushion? Okay, good. Next. Then my next investment priority was always improving my income, right? And if I've made income investment in producing investments that year and I felt good about them, then I took the additional capital and put them into something that could generate, a long-term capital gain for me eventually. Mm-hmm. And that's the philosophy. So I think that the interesting thing to turn this question around is that I think the idea of people saying, well, if you have to change your investment philosophy because you retired, then your pre-retirement investment philosophy was broken. And you should be thinking about a more permanent portfolio that should not have to change just because circumstances in your life change, right? You should be thinking about those circumstances in your life changing, because you know what? Retirement isn't always voluntary, right? Retirement could be, I got let go. My company blew up, right? The board was doing bad things. I worked for the next Enron, and therefore, poof, right? You should be thinking about those things, and as you move forward.
Well, I do recall that it was the intent to retire was part of your philosophy and your plan for pretty much as long as I've known you, and you acted on it when you felt like it was the right time. I appreciate that you said that your philosophy and your approach really didn't change because those were all built in. Others who are listening are in their careers still working for the man or the woman or the company. What advice would you give them, those who are aspire to retire at the ripe old age of their mid-career time?
I think the biggest thing is that I find that it's one of the things that's very hard about being in the corporate space is that there's a system, right? If you pay attention, there's like a system that you're geared into. I actually have a good friend that when I worked with at Red Hat, it was interesting for me because he helped me. He married into a rich family, And we talked about it a lot because he came from a family that was not. And we talked a lot about their perspectives on things, right? That, you know, people and the normal thing, oh, you're supposed to work and you put money in your 401k and you invest here and you do this type of investing and not that type of investing. And then you get out there and the plan is almost made for you, right? You're supposed to work until this age. Why? Because that's when you can take money out of your 401k and then you're supposed to do it this, but you really should retire by this age, right? And so there's a lot of stuff that's on autopilot. And I think the most important part is to really understand, what are you doing, right? Don't make it based off of what the plan is. Like, what do you want to do, right? When is it that you want to do it? What is the thing you want to accomplish? Make sure you have a plan. Make sure you have an agenda to get this thing going, and then work backwards from there, right? Now, this doesn't mean I didn't contribute money to my 401k. I definitely have money. I put money in my 401k, but it doesn't mean that I was like, well, you know, I have plenty of people that are like, well, I put money in my 401k and I have a very good mortgage and that's my plan. And I'm like, but what is your plan? Well, to put money in my 401k and pay off my mortgage. Really? That's the whole plan? Like, yeah, you might need to add some other things to that, you know? So that is a big thing, is really have an agenda, have a plan. What do you want to do? Make the pieces of your life work around it. And then understand when you want to get out. It's actually funny. It's not that different from an investment, right? If you get investment advice, they tell you, it's like, why did you get into it? Why do you get out? Right? People should look at jobs or careers the same way, right? You know, for me, when I started my career, for instance, I started a company that was not much more than a startup. They were just barely IPO'd. They were getting into the tech bust, right? It was a very scrappy company starting up. And then worked there until my company got bought by one of the oldest blue chip tech companies on the planet, right? And they definitely were not that kind of company anymore. And I'm like, yeah, I think this is where, you know, this is where it probably is a good off ramp for my career, right? Yeah. And so understand those kind of things. Don't just operate on autopilot. Don't just say, well, I guess I'm going to do this till I'm 65. Just have a plan for what you really want to do and when you want to do it. And, you know, I think a big thing too that, you know, that you said was that, you know, this is kind of a midpoint, right? And the interesting part about this is that for probably 6 years, I've been talking about around age 45, which I just turned yesterday.
Happy birthday.
My wife and I, thank you. Talking about like, this is a midpoint. This is a place where, you know, a good time where if I want to have another whole cycle, right, and go carry something in my career, that this is a good place to go do that. And so we have been planning, you know, looking at this kind of time period for quite some time, and many, many, many things. I mean, we were talking about this before, Obris talked about this before my company ever got bought out or anything like that, right? But those conditions changed, but it didn't change the objective and the reasons why I would do it.
Right.
This is other factors to go pull in.
Right. You know, we've just barely touched the surface of what I think is what makes up Kyle as a human being, as an active investor. I'm going to do a real quick plug for our events, because our events, Kyle, are a great place for people to get to know folks like yourself, to get to know you and others like you, who are very active investors and have learned along the way. To the credit of those who are listening or watching, I think that most are probably not just plugged into the system on a conveyor belt, but they're actually active, looking to how do I grow my wealth? How do I grow my life? And I know that for you and your wife, the lifestyle was part of that your grand plan. Is you have a lifestyle that you want, a lifestyle that you live, that you wanted to make sure that you're able to maintain that. So you're thinking about the present and the future. Well, we're going to wrap up in just 1 second. I'm going to ask, are there any last words that you'd like to share with our listeners and viewers?
Wow.
For today, last words for today.
Don't do anything I wouldn't do. It still gives you a whole lot of options. But no, I mean, I really think about is when everything I've done. I mean, when I really look at the times when I've been successful, the times I've been successful, I've had a plan. I understood why I wanted to do it. I really put a lot of thought into it, and then we just put on execute. Like once the plan's decided, yeah, we had touch points and check-ins, but we did it. And when I can look at times where I felt like I wasn't successful, whether it was with a job or something I was working on or an investment, I didn't work the plan. I didn't go back to my basics. I didn't work through there. And I think it's important to have that and understand what your tolerance is for risk, what you want to achieve in the end, and to set your goal and set your own goal. Because at the end, no matter what happens in life, if you achieve your own goals and a bunch of other things happen outside of you, then aren't you successful? Isn't that you got what you wanted? Then you win.
Well, that was a great interview. Thanks very much to Kyle Gonzales. Kyle is a good example of an Obris member. Our members and guests are really an amazing group of self-made and accomplished individuals and investors. We come from 15 countries and a wide variety of professions. We share the common pursuits of surrounding ourselves with great people in great places and gaining significant returns in investing. I recommend that you consider Obris. Head over to our website, obrisinvest.com. That's obrisinvest.com to learn about our investor group. We are welcoming new members at this time. And also, the best way to get to know Obris, folks like Kyle, is to come to one of our events. We are currently preparing for an event in Dubai, in the United Arab Emirates, starting on March 30th. We'll have details on the website very soon. Thank you very much for joining us this week, and all the best to you. Thanks.